All right, we'll be getting our numbers here in about 2 minutes. Good morning. I'm Pat McClatchy with our E3 Live weekly export sales report and market outlook. As we wait for the export figures to come out, we are looking at cotton up about 22 points. Soybeans are up a half cent, corn's unchanged, and wheat seems to be down a penny right now. Overnight, the dollar's down 30. That's supportive for commodity prices. Crude oil's up $1.10 a barrel. Gold and silver are also up. So we have a little bit of a positive tone going into this export report. Really expect probably in cotton maybe not to see quite the numbers we've seen. This number reflects last week's sales. We were seeing quite a bit of sales under 60 cents. Last week we were above 60 cents. We'll see. But it would not surprise me to see numbers off those very large levels of 400,000 plus in cotton. Expect what we've been seeing in terms of exports for soybeans. Don't expect large cancellations. Also in corn, we're looking for a good number there, and in wheat it probably should be similar to last week. So in about a minute we'll start getting our reports. Just a reminder that last week we were seeing numbers. Last week we had wheat at almost 400,000 metric tons, corn at 845,000, soybeans at 490,000, and cotton at 422,000. That's last week. So we're about to get these. As I scroll across the page, we'll give you the numbers. We'll also give you the reaction to in the markets. All right, here we go. Cotton is a lower number. 52,200 bales is what's showing for cotton. We've got the wheat number at 409,300. Corn number is 1 million metric tons. Soybean number is 745,000. All these numbers are as expected. The cotton number probably is a little lower than the markets expected. As I mentioned just a minute ago before this came out, we had the the cotton market was up 22. Right now the cotton market is up about 5 to 6. All right, we have a breakdown of these numbers. Let's first go to cotton, 52,200. That's down 88% from the previous week, and also down 89% from the previous 4 weeks. China took 22,200. Vietnam took 15,700. And Indonesia took 13,900. Right now, cotton is down 9 points. So we continue to lose ground in reaction to this export figure. Let's now go to wheat. The wheat sales of 409,300. That is up 3% from the previous week, but down 3% from the 4-week average. The breakdown shows unknown destinations, 128,000. Taiwan took 86,800, and Thailand took 55,000 metric tons. Wheat was actually down about a penny when this came out, and it's still there, so no change. Corn, pretty good number, to million, slightly over a million metric tons. That's up 19% from the previous week, but down 17% from the prior 4-week average. The breakdown shows Mexico at 427,900. Then we're looking at Japan at 172,800. Colombia took 71,600 there. Break down now to the soybean market. The soybean number of 745,400 metric tons. That's up 52% from the previous week and up 29% over the prior 4-week average. China took 603,000 metric tons. Indonesia took 82,100. And Germany took 70,000 metric tons. Cancellations. We did have cancellations that looked to total about 200,000 metric tons, but it was still a good number for beans, even with some cancellations. And it's encouraging that China was in for the market also. All right, let's look at the markets again. Cotton market is down in the March 7. December cotton is unchanged. Soybeans are up 1/2 cent to a penny higher. Corn's down 1/2 cent. The wheat market is down 1.5 pennies. Let's kind of look now at what's happened over the last week. And we'll start with soybeans. On Tuesday, the USDA reduced its U.S. ending stocks by 25 million, so a little more than expected. Stronger exports and crush more than offset a small increase in imports. Seasonals normally should start pointing up now into the spring. This is a time when we'll start to move higher. November beans will run into heavy resistance on rallies with the large soybean acreage we know or anticipate is coming this spring. A rally in November soybeans toward 980 to 990 we feel like will be sold. And right now November soybeans are trading at 960. So 20 to 30 cents higher, and probably you'll see in November soybeans, you'll see farmer hedging at that point. Now let's go to corn. The USDA report was not a surprise for the market. The report that came out Tuesday, the market did try to firm up but could not and started to sell off. The seasonal trend should start also in corn to move up into March. Good demand will help along with a smaller crop planted. Looking at December corn right now, that's trading at 415. A rally in December corn toward 430 will probably find selling in that area as we look out into the coming weeks. Let's go to wheat. Not a lot of news on the wheat. No great surprises in the USDA report, and no reaction really to this export figure that just came out. Wheat typically seems to be right now influenced, like everything else, by the outside markets and the dollar, the crude oil, and precious metals. But it also follows soybeans and corn, and we think that will continue. A move back for July wheat that right now, July wheat is trading at 526. A move back toward 550 will probably run into selling there. Now let's talk about cotton. Cotton market, looking out, has had a good rally in the last 2 weeks. Looking at the USDA report, there were really no surprises. We're looking right now at very good demand for machine-picked high-quality cotton, the kind of cotton that's grown in the United States. We've seen strong basis levels. We've seen very good buying. Before this number today, we saw 2 million bales of cotton sold in the last 4 weeks. And I think with this lighter number today, it reflects that the mills are very enthusiastic buyers at 60 cents and lower. And it also appears they don't want to really chase the market. So that's something to consider. But looking at the high quality cotton situation and why there's so much demand, or has been, at these cheap levels, the modern day mills seem to be interested in machine picked, non-contaminated cotton, the kind of cotton that's grown in the U.S., the kind of cotton, the high quality cotton that's grown in Brazil and also Australia. Australia and Brazil have both had poor crops, so that puts more pressure on finding this type cotton that the mills really want, and that's why they've come into the U.S. so strong. 2 weeks ago, jumping over to talk about technical factors in the market, under 59 cents. We continued to see about 2 weeks ago the speculators and the large commodity funds were continuing to sell cotton, building a short position. When the market started to rally back and get above 60 and then eventually 61, we started to see quite a bit of short covering from these funds. When we got above the 100-day moving average, it started to move up even more. The feeling now is that funds are interested in buying the market to accumulate a long position, and that dips back into the 60 and a half, maybe 61 level basis to March could be met with good buying from the funds, and that any dips towards 60 or lower will be met with very strong buying from the mills. So the market seems to be set up to move higher right now. In looking at old crop cotton, there are really three factors to look at, and we've talked about this a little bit. Number one, the tightness for high quality machine picked cotton. Number two, good mill buying under 60 cents. And number three, speculators or the large funds starting to want to buy the market, especially if we start to dip. That's the world in cotton for old crop. But the new crop presents a different picture. Many analysts are talking about the need for new crop cotton to remain at lower levels because the world supply of cotton is so high that the world doesn't really need a lot of cotton planted this year. I think that where there's a difference of opinion is that there's a demand and a shortage for this type of cotton that's grown in the U.S. and do these mills really want to discourage these farmers from planting cotton in the spring? At these levels, with December cotton trading at 63.40 right now, the feeling is that these levels will discourage worldwide cotton acres. And I'm not sure that these mills would want to not have assurances of a good, stable supply of cotton for next year. So what it means is this: I think most analysts agree that the upside potential for new crop cotton is the same. The talk is for 70 to 74 cents basis the December cotton. The difference of opinion is that some analysts that think the market shouldn't rally now to discourage cotton thinks that a rally will start after planting time, and that rally will take us up into the low 70s. Other analysts feel like the market wants to respond before planting time to assure proper acres for this high quality cotton, feel like that the market will rally now into that time period, into planting time, so that the market and the world can react to it. So that's really the outlook and the current situation for cotton. Two stories in cotton: one old crop, one new crop, and some debate over what it means. But we'll wrap up our meeting for today and just say thanks for joining us. We hope you'll come to our site, agmarketnetwork.net, and look at our different posted shows that we have on. Yesterday we had our monthly Ag Market Network teleconference. We hope you'll listen to that. Also, each Monday we post the Cotton Incorporated cotton recap for the week, and OA Cleveland does that for Cotton Incorporated. So we have a lot of content on our site. We hope you'll join us. We want to thank our sponsors again: E3, Bayer Crop Science, E3, which is their cotton sustainability program. We thank them for sponsoring us here at the E3 live export sales and market outlook report. Thank you.